So, Microsoft, earnings per share, 346 versus 322 was expected. Good number by Microsoft. The revenue came in at over $70 billion they just did in the quarter versus $68.4 billion was expected. So a very good revenue beat for Microsoft. So double beat, very sweet. Now, here's where things get very interesting. The Microsoft Cloud was up 22% on a constant currency basis. Now, keep in mind, when you guys are looking at these reports, if a company shows it on a constant currency basis, look at the constant currency numbers. It's going to give you more detail about how the business is actually doing on a year-over-year basis, because sometimes currency is a huge tailwind for a business and it makes things look way better than expected. Sometimes it's a big headwind, and for a lot of these international companies, it's a big headwind right now. So if you want to know how the business is actually doing, look at the constant currency numbers. It's so important, okay? Now, additionally, the Microsoft 365 product groups were all up between 12% and 15%. But here's where things got pretty shocking. Azure, right? Which their cloud. This is their AWS competitor, their Google Cloud competitor, right? Look at the number they posted. 35%. Holy smokes, this ain't no jokers. Growth on a year-over-year basis on a constant currency basis. Their business is booming for them. If anything, is seeing an acceleration of business, even despite all the stuff and tariffs and Trump and drama and oh my gosh, okay? It doesn't matter. Their business is a growth beast for Microsoft. Now, additionally, look at search and news advertising. That was up 23% on a constant currency basis. Now, keep in mind, when we talk advertising, we're talking Google and Meta. They run the world when it comes to advertising. But then after that, you start thinking about who? You start thinking about Amazon. Then after Amazon, who do you think about? Actually, Microsoft's kind of the fourth player in this market. They kind of get forgotten about in the advertising game, but it's actually a strong growth engine for the company. 23% growth on a constant currency basis. That's very impressive for Microsoft. So based upon these numbers, if you're a Microsoft shareholder, you can be nothing but happy. Additionally, look at the income statement. An A+ grade, folks. Revenue over $70 billion versus $61.8 billion the same quarter last year. Total cost of revenue came in at a little under $22 billion versus $18.5 billion. That's hardly anything. When your revenue is up over $8 billion on a year-over-year basis and your cost of revenue is up around, $3.4 billion or so, your gross margin is going to explode. And that's exactly what happened. Gross margin went to $48 billion plus from $43.3 billion. R&D, they kept that pretty in check. It was only up about $500 million year over year, not a big number. And here's where things get crazy in regards to Mr. Softy. Sales and marketing was basically flat year over year. How? How was this company able to grow their revenue over $8 billion on a year over year basis with sales and marketing that's basically flat year over year? I don't think we've ever seen a company in the history of mankind. Matter of fact, I'll go on and say it. I've never seen, in my 16 plus years of being in the stock market, I've never seen a company be able to keep their sales and marketing basically flat on a year over year basis and have their revenue go up over $8 billion. That's ridiculous. But even more shocking and ridiculous than that is general and administrative. They were able to actually decrease their G&A cost on a year-over-year basis. Yes, decrease it. And they still, even with growing the revenue $8 billion plus, they had less G&A expense. Oh my gosh. These companies are unlocking, a company like Microsoft's unlocking a whole new level of margins and profitability that we've ever seen. This is ridiculous. Operating income went to $32 billion versus $27.5 billion in the same quarter last year, right? Crazy number. That's in a 3 month. So they have operating income of over $10 billion a month right now. And it's growing. It's growing. Like, it's ridiculous. Imagine having operating income. What do you even do with the money? Like, it's just so ridiculous. Net income came in at $25.8 billion versus $21.9 billion in the same quarter last year. Diluted EPS, $3.46 versus $2.94 in the same quarter last year. A+. Bravo. Income statement for Mr. Softy. Incredible. Now, stockholder equity for Microsoft just went to $321 billion versus $268 billion in the same quarter last year. But look at the last 9 months. In the last 9 month span, the company's brought in almost, we can call it approaching $75 billion of net income. Net income, that's after everything's taken out, all the expenses, all your taxes, all that stuff, and they still have about $75 billion to show in just the past 9 months. Ridiculous. Incredible, right? And you can see why a company like Microsoft is a $3 trillion market cap. It 100% deserves it. And when you look at this company, right, looking at 1000xstocks.com here, look at the valuation. Forward P in 28 or so, it's not really expensive. It's just, for this company, the only way that would be expensive is Microsoft growth just completely stalled out. If all of a sudden, Azure started growing 2% and, revenue for the company started flatlining or something like that and started growing 1%, 3%, then you could say, yeah, Microsoft's an expensive business. But with this company growing strong double digits like it is, that's not an expensive stock. Microsoft is a buy today. It was a buy yesterday. It was a buy last month. There's a buy next month. I think Microsoft's still a buy at this point in time. But here's where things get very important in regards to the entire stock market for companies like NVIDIA, companies like AMD, and many others, okay? Here, and even Amazon. Listen, the Azure revenue grew 33%. Keep in mind, once again, on a constant currency basis, it was 35% growth. But listen to this. 16 points of the growth was associated with AI. Now, guys, this is huge, okay? And I mean, this is bigger than huge, okay? Let me explain this. There's a huge worry going on around the stock market of, companies like Microsoft, Meta, all these companies, Google, they're all spending a fortune on all this AI chips and infrastructure, but are they really going to get the payoff? Are they actually going to see their numbers increase in any substantial way from all this, right? And this is the first year that we're kind of trying to look for some details in regards to this. Companies started spending in 2023, then they spent aggressively last year, and they're spending even more aggressively this year. But this is the first year people are kind of like looking and saying, okay, we got to start to see some stuff here, right? And then we got to see continued growth in 26, 27. We're starting to see all the spend that these companies are doing starting to come through in the numbers. And that's huge sigh of relief, because the worst thing we could see is these companies spending all this money and at the end of the day, they're not seeing anything from it. No, we're actually starting to see revenue pour in from all this spend. When you talk about Azure grew 33% and 16 points of that were associated with AI, now we're talking, right? If you want to go even more bullish, let's go even more bullish here. This is on the conference call. So even with the capacity that we're bringing online in 2025, right, which is a ridiculous amount of capacity Microsoft is bringing on, we are having a hard time meeting the demand that teams have for compute resources across the company. So what that means is very bullish things for NVIDIA and AMD. If you thought, all these companies are going to stop spending money on NVIDIA chips, or, obviously AMD is just about to really get to the fun in regards to their chips with MI350 hitting as the summer goes along, right? And then, into late next year, and then we go into MI400. Like AMD is just about to start their fun cycle. But the fun cycle, even in regards to NVIDIA, is not over, okay? Now, keep in mind, that does not mean NVIDIA stock's necessarily going to boom to the moon and set a new all-time high. It can go through a kind of a bullish cycle, but do keep in mind, since 2026, companies will likely slow their CapEx budgets, right? That's going to definitely at least put kind of like a little bit of a lid on NVIDIA in the short term. And when I say short term, I'm really talking about the next 12 months. So do keep that in mind, right? AMD really has no lid on it because they're just about to get to the fun, where NVIDIA has been in the fun for quite some time. So do keep that in mind. But overall, very bullish statement for NVIDIA and AMD there, which is huge for the semiconductor industry, right? Now, additionally, this is huge, guys. Microsoft CEO says today that AI now writes almost 30% of all new code at the company. Keep in mind, what's some of the biggest, most expensive things that, hit those line items on that income statement for these big tech companies? It's software developers. Software developers have made bank the last 10, 20 years, right? If you were a software developer the last 20 years, you made a lot of money. Like ridiculous sums of money. Like it's one of the best industries you could possibly be in. Like if you were focused on software development, you've been able to make probably $300,000 to $500,000 a year, depending upon how high level you are. But that's just base salary. Then you add on all the stock comps and things like that. There's some top level software developers that are pulling in millions of dollars a year between their salary and what they get in stock as well, right? All their stock options and things like that. It's a huge deal. So now with Microsoft saying that AI is writing almost 30% of the new code, it's going to keep increasing. It's going to go to 40%, 50%, 60%, 70%, right? Which means these companies like the Microsofts, the Metas, the Googles, all these companies that have this massive software teams, they're not really going to need to grow those teams in any substantial way over the coming years. Now the expense of software developers is definitely capped in a major, major way, right? Which means these companies like Microsoft, Meta, Google, all these companies, right, that rely on software developers in a heavy way, they're going to reach new levels of margins and profitability that we've never seen. And they've already done it. Like you think about it, like these companies, the Microsofts, Apples, all these companies have hit net margins and gross margins that it was never conceived like companies could ever do this, right? The Adobes, all these companies. They're about to reach another level. Another level is about to be unlocked over this next 5 to 7 years, which is just ridiculous because, we're going to be talking about, some of these companies approaching net margins of probably 40 or 50%. And it used to be great if you had net margins of 10%. And we've seen these companies over the last decade get to 30% net margins. We're going to be talking about some of these companies are heading to 40 to 50%. Insane. Now, somebody on X was trying to basically make a bear point around Microsoft. And what they were saying is, look, diluted EPS went from 27% growth to 20% to 18%. Okay? Listen, this is kind of laughable. Okay? First off, law of large numbers catches up with all companies, right? So naturally, as the numbers get bigger and bigger and bigger, it's going to be harder and harder to, impress with the percentage growth. But what becomes even more important is not just the percentage growth, it's the dollar amount. Like, for instance, look at back in 2023 on a GAAP basis, operating income, right? $26 billion, right? $26.8 billion. In the latest quarter here, they just did, right? Just 2 years later, $32 billion. You say, well, yeah, growth rate's slowing. Yeah, but the absolute number is absolutely ridiculous. Even if Microsoft takes that diluted EPS growth down to 15% or 12%, the absolute number is so ridiculously huge that, it's like, okay, yeah, but look at how big the dollar amount increased, right? Now, additionally, I thought this was important because they didn't highlight this. Look at the percentage change in revenue on a GAAP basis, right? It was up 13% at that particular time, 2 years ago. Look at where it just came in, 13%. So you would think like their revenue should be like decreasing over time. No, it actually hasn't. Important, right? Now you look at Amazon stock and you say, why is Amazon going up here? Amazon stock's up, 3.6% after hours. They didn't report earnings. Well, AWS. If Azure just grew numbers like that, is a belief that AWS numbers will be even better than expected tomorrow, which would be a huge boom for Amazon stock and take that stock to $200 plus. So people are basically front running this whole Amazon situation, right? And in regards to Amazon, how big are the beats going to be tomorrow for Amazon? You've seen Google's numbers and their beats. You've witnessed Meta and their beats. You witnessed Microsoft and their beats. How big are these Amazon beats going to be? Because if there's one company that I know can just come in with a shocking number and everybody should be like, what? How did they put up that number? It's Amazon. They're amazing's on for a reason. And analysts only have this company growing 8% revenues for this quarter they're about to report. Okay. okay. That should be fun. And they have them at $1.36 of EPS for this quarter they're about to report. Oh, baby. Amazon's going to be fun. Amazon's going to be fun. They rarely ever disappoint, and when they do come through with a number, it's usually pretty shocking. So that's going to be a fun one to watch. By the way, this was news in regards to Amazon today as well. Amazon to spend $4 billion on small town delivery expansion, which is good for anybody watching this that might live in a small town. Us that live in big cities, right? We take it for granted as far as all the prime trucks driving around all the time and things like that. But small towns supposedly have been a little harder. Listen, I just thought it was worth mentioning. This is definitely bearish for dollar stores. Dollar stores have relied heavily on smaller towns across the United States to really, fill demand for the last 10, 20 years. And if Amazon's going to be expanding there, it's definitely going to hurt dollar stores over this next 5-10 years. There's no doubt about that. It will hurt Walmart to a certain extent, not in a huge extent, but to a little bit of an extent, because Walmart sometimes in a lot of small towns will at least build one big store there. So Amazon building out, if anything, is a little bearish for dollar stores, okay? No, Meta. Okay, here's the deal. The EPS smashed. 643 versus 528 was expected. I posted this on X. Not sure if you guys follow me on X. If you don't and you want to follow me on X, I always have it linked in the description area of all my videos, okay, along my Instagram as well. Revenue came in through at 42.3 billion versus 41.4 billion was expected. Huge beats the earnings per share number is just a jaw dropper. And it just makes you think, gosh, if Meta just put up that sort of EPS beat, what is Amazon about to come through here, right? And I went to this earnings with $864,000 worth of shares in the public account. And as I put here, I said Meta remains easy money. Look at the numbers. Revenue 16% up year over year. Cost and expenses only up 9%. Okay, if your cost and expenses only up 9%, your revenue is up 16%. Your income from operations is going to explode. It's exactly what we witnessed play out. Income from operations was up 27% year over year. Net income up 35% year over year. Diluted EPS up 37% year over year. Now, revenue on a constant currency basis, remember I keep talking about this, right? Because this is a headwind for companies right now. But if you want to know how these companies are actually doing, look at on a constant currency basis. Revenue on a constant currency basis was up 19% from Meta year over year. Phenomenal number. Phenomenal number. Okay. Now, additionally here, you look at CapEx. They had CapEx at $13.6 billion. Capital return program, they bought back $13 billion worth of shares and they paid out $1.3 billion of dividends, which I do appreciate as a Meta shareholder. Cash and cash equivalents and marketable securities were $70.2 billion. Cash flow from operating activities, $24 billion. Free cash flow over $10 billion. Headcount was actually up 11% year over year, so actually increased headcount a pretty good amount, which is wild because their net income was still up 35% with a headcount up 11%. Crazy, man. Crazy. Now, additionally here, as far as the CFO, the guidance was phenomenal. They guided for a range of $42.5 billion to $45.5 billion in terms of revenue. And keep in mind, Meta usually does what? They come in and they beat even their high end. So don't be surprised if they come in and beat their high end, right? So very strong guidance there. If people thought like the whole economy is crashing, no one's going to advertise on Meta or something like that, as I told you guys, it's complete BS. It's complete BS. Like, if you don't advertise on Meta, you don't have a business. Like, how many small businesses count on Meta? Like, there's not an option to be like, well, time's a little shaky right now. Well, consumer confidence isn't so good, so I'm not going to advertise on Meta. No, you don't advertise on Meta platforms. You don't have a business. And business owners understand that. If you're a business owner and you get what I'm saying right now, if you don't own a business and you just work for a company or an employee, you might not understand what I'm saying right now. But trust me, a ridiculous amount of businesses around the globe count on Facebook and Instagram to acquire customers. And they do that through advertising. And so my beautiful hummingbird just paid me a visit. If you don't advertise, you don't have a business. Your revenue goes to zero. Like Robert De Niro, Last Action Hero, baby, okay? He was never in that movie. So, bullish AI. Okay. You know what Meta just did? They did something huge. They just upped their CapEx budget. They're talking about now they're going to spend in a range of 64 to 72 billion this year. That's from a prior outlook of 60 to 65 billion, right? Meta's not going to spend that sort of money unless they're extremely confident they're going to get the payback on that. So this is very bullish AI. The whole negative AI, worries out there about all these companies. Believe me, Meta's not going to spend that much unless they're going to get a ridiculous return on this in the end, right? Once again, this is also bullish for companies like NVIDIA, companies like AMD. Huge for these companies, right? Now, if you look at the income statement, this is beauty as an A+, baby. An A+. $42 billion of revenue versus $36 billion the same quarter last year. If you look at research and development here, that was the one maybe trouble spot. A little over $12 billion they spent versus $9.9 billion, but keep in mind the company's spending heavy for the future. Income from operations, $17.5 billion versus $13.8 billion. Net income, $16.6 billion versus $12.3 billion the same quarter last year. Diluted EPS, $6.43 versus $4.71. Incredible. That, folks, is what an A+ income statement looks like. And if you want to know why does everybody want to own stocks like Meta, stocks like Microsoft, because they're the companies that come through quarter in and quarter out. They don't disappoint. and they absolutely tear it up, man. Incredible A+ income statement. Now, this is laughable. Analysts, these numbers that they were expecting here is just like laughable looking back at it, right? And what they're expecting next quarter is also laughable. Like they're going to come in and crush analysts' expectations next quarter again. Analysts are going to have to bring up all their expectations in regards to Meta over the next few months before they report that next quarter. Because if analysts just kept the numbers they have right now, look at $560 expected next quarter. They're just over $6 in the last quarter. Now they're going to do even more revenue, and you think they're going to do $560? Analysts are going to have to bring up all their numbers in a huge way to even be in the ballpark of what Meta is about to report next quarter, 3 months from now, which means bullish activity in regards to Meta on the analyst community, bullish activity on Wall Street. They're going to have to bring up numbers, bring up price targets, everything like that. It's going to play out in regards to Meta over the next few months, right? Now, this is also hugely bullish for the entire stock market, right? Because you've got to keep in mind, these companies have just massive weightings. Like you look at the NASDAQ 100, look at the weighting. Microsoft's over 8% weighting, right? You look at Meta, 3.3% weighting. If you look at these companies' weightings on the S&P 500, they're huge. And so this is bigger than just like, oh, this is good for the, Meta, Microsoft, maybe NVIDIA, AMD, companies like that. No, it's bullish, way bigger than that. Now, you might say, why are the moves not even bigger? Like, why is Microsoft and Meta not up 10% plus after hours right now? So keep in mind, if you look at the last 9 weeks, we've never seen, in terms of AI investor sentiment, we've never seen it this bad on a 9-week span ever in terms of how bearish investors have been. So that's a huge worry, right? So investors are still kind of a little shy about going in there and just bidding up these stocks. Additionally, you have a lot of international money that's basically trying to play this game in the short term of like, we're not going to buy U.S. stocks. We're anti-U.S. because of, Trump and tariffs and everything going on there, right? And so you have a lot of international money that would usually be coming into these stocks, seeing these phenomenal earnings. That's just not coming in right now because they're like playing the whole game of like, no, we're not buying those stocks right now. Like we're mad at them. We're bearish on them, which, in my opinion, is not the best way to play this game. Like you got to look out for your money. And by not buying these stocks, is not a good financial choice, right? And so, but that's a game that's being played right now. So if you're wondering why these moves aren't even bigger, that's what it comes down to. Investors in the U.S. are still kind of like scared, like, oh, I don't know, Trump, And then you got the international money that's kind of playing this game like, no, we're not buying those stocks right now. Eventually, international money is going to give up playing that game. Eventually, the high net worth Chinese individuals, the high net worth Europeans, and the other folks around the globe are going to eventually get out of this game and going to say, damn it, Because at the end of the day, money always wins. Money always wins. And when you start to see these stocks perform better and better and better, you start to say, why am I over here in blah, blah, blah asset that's underperforming significantly when I could just be over there in those stocks that I used to own, that I sold out of because I was mad at tariffs and all this? It's what ends up happening. Money always ends up winning in the end. And so it is what it is in the short term, and it's great buying opportunities for folks that aren't playing that game. But, that is what it is, okay?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Will he be buying any shares of Palantir or HIMS now at this point in time? Okay. Well, here's the deal. They're no man's land. Okay. Both of these stocks are now in no man's land. And when I say no man's land, that doesn't mean they're, destined to crash or something like that. It just means it's going to be hard after tomorrow. It's going to be hard to move those stocks significantly down further or significantly up further, because the bulls don't have enough ammo to get super, super excited about things. and say, I got to go buy some tomorrow because it's going to skyrocket. And the bears don't have enough to really like short these stocks yet or like really bet against them because you don't have enough evidence either way in regards to this. You're kind of like taking a gamble. Like if you're, trying to play these stocks from like a 6-month perspective, which is what a lot of Wall Street does, you aren't at a stage yet that it's clear like these stocks are going down for the next 6 months or up for the next 6 months, right? And so I would look at both of these as no man land stocks where it's just they're going to kind of flounder around. They'll move up some days, they'll move down some days, but it's going to be hard to make a definitive move on either stock. They're going to kind of shake around with the market. If the market's having a great green day, they'll probably go up. If the market's having a bloody red day, they're going to go down. And it's going to be hard for them to make any significant move until next quarter, and we get a better clarity, right? Because the overhang on Palantir now is, has revenue growth acceleration done? Or are we about to go into decel? And then with HIMS, it's around that guidance. And people are like, why was that guide kind of weak? And I don't know about this. And so that's what's going on with those stocks. And so they'll shake around. But at the end of the day, after they make their moves tomorrow, it's going to be really difficult to have those stocks make any significant move up or down after that. It will kind of just be in no man's land until you get more clarity on either of those events, right? No, as far as me personally, am I interested in buying Palantir or HIMS? Okay, more shares. Well, I don't own any shares of HIMS, but I do obviously own Palantir, right? In regards to Palantir, no. I feel very comfortable with what I hold in regards to Palantir. I have these shares in the public account. I have more shares in the Patreon portfolio as well, right? So I don't feel like I need to go buy Palantir tomorrow or not. I'm happy I was able to buy Palantir at an average cost basis of $7.39 a few years ago, right? Magical. With Palantir now, you're playing with a lot of fire because of the valuation of the stock, right? And if that revenue growth does start to decelerate, the stock's going to get hammered. There's no debating it. It's going to get hammered hard. And the problem is with Palantir, the overhang for Palantir for a while, honestly, is going to be, even if next quarter, let's say they come in with the 41% revenue growth next quarter, so slightly accelerating from this past quarter, 39%. Okay, then people are going to look at the next quarter and be like, maybe the acceleration's done. So that's the issue we have going on with Palantir. And then remember, we're going to have to comp these numbers next year. And because these numbers are so strong, it's not like this is going to be easy comps next year. And people are going to be thinking about that. They're going to be thinking, because remember, you got to understand, a lot of people that own Palantir stock or buy this stock are not holding it for the next 5-10 years. They're holding it for the next 5-10 weeks or next 5-10 months, right? That's just the truth. A lot of these hedge funds, they're not looking at Palantir and saying, oh, I want to own this for the next 10 years. They're saying, I might want to own this for the next 10 months. And if they look out there and they say, okay, revenue might start to decelerate, they look out there and they say, you know what? The most exciting times for Palantir is probably done in the short term. The stock is going to get hammered if that's the situation, right? And they may say there's limited upside there with significant downside risk. HIMS might be interesting. HIMS might be interesting. I need to listen to a conference call. But looking at the numbers of HIMS, I'm pretty impressed. Looking at the business model of HIMS, I'm pretty impressed. But I need to listen to that conference call. And if I walk away from that conference call really impressed, could I start a position in HIMS in the next month? I wouldn't be surprised. I love betting on companies that have great, next 10 years in front of themselves, right? And I look at HIMS and I'm like, dang, it looks pretty promising. So I need to listen to that conference call and see. And then maybe I could start a position in HIMS because some of these, I'm already kind of moving on to my next batch of stocks to buy, right? If you look at the last generation of stocks I was buying, when the last generation, meaning the stocks I was really loading up on, the past few months, a lot of those stocks I have my positions built now. The Nike, the AMDs, a lot of those stocks, the Celsius, I have my positions built in those. I feel comfortable with where I'm at, right? So now I'm kind of looking at the next generation and I'm buying this next generation of stocks, which is like Adobe and Google and some of these others. And I'm looking at somebody like a HIMS here. And I'm like, might be, man. Might be. So, but I got to listen to the conference call and we'll see where that goes. And then maybe I end up, adding a HIMS to the portfolio because it does look fairly promising, right? Because at the end of the day, if they execute on what they could potentially execute on, I mean, we could be talking to a company about a healthcare giant long term, right? Not like a little niche player in the healthcare market. No, like if HIMSS really executes well over this next 10 years, like you could be talking about this becomes a healthcare giant in the United States of America and maybe even international as well, right? Where they become one of the biggest players in pharmaceutical delivery, healthcare, right? Healthcare on your phone and be able to have a new age doctor experience. I mean, I don't know, man. Like HIMSS could be very, very interesting.